Hi everyone, and welcome to the Buffett and Beyond ETF report for February 17th, 2024. And we're going over returns that are hedged and unhedged year to date. So folks, let's get going on it. And first of all, let's look at the charts of some of our favorite ETFs because they are giving us fits. And really what we're looking at right here is the short-term indicator, which seems to be right in midstream, doesn't know where it's going. Now right here is the 20-day exponential moving average, and you can see on Tuesday we came down drastically, hit that 20-day moving exponential average, and then bounced right off, but seems to be stuck in here a little bit. Why? Because we're waiting on NVIDIA to report. And when we look down here at our intermediate term indicator, the technology ETF has turned down. Now, let's go to the semiconductor. We kind of see the same thing. Short-term indicator up here in the middle of nowhere. It is above, went down and tested that 20-day exponential moving average, bounced up, and down here we have a signal that is an intermediate term signal that is pointing up. So the XLK, let's go back to that. XLK technology pointing down, XSD, which is the semiconductor ETF, pointing up. So what are we to do here? Now let's go to the QQQs and let's see what it's doing. Well, short term in the middle of nowhere. Again, it did the same thing that the technology and the semiconductor did on Tuesday. It had that drastic downdraft right to that 20-day exponential moving average and now bouncing up. And right here, the intermediate term indicator, it's neutral. So we have one heading down, one heading up, and one being neutral. And let's look at the S&P 500 and see if it's going to give us any indication. Oh my gosh, we could substitute these charts. They all look the same, don't they? And guess what? Yeah, the S&P is about as neutral as you can get. Now, let's look at the returns for this year to date. So we're looking at a month and a half. Now, for you folks that are subscribed to the ETF letter, you will see these stocks. Let me go here. Okay, all we see is returns right now, but you will see the stocks in each of these and how the individual stocks are doing. Just go to the website, just go to the subscribers locker, and under the ETF sector near the top, you will see all these stocks and how they have performed in each one of these. Okay, so these are the top four that we like. This is the technology index, technology ETF. It is up 6.2% as of Thursday market close, up 6.2%. The S&P is up 5.5%. But the top stocks that we picked for this XLK is up 14.5%. Folks, that's more than doubling the XLK itself. So it helps to pick the best stocks in the best ETFs. It's that simple. Now, if you were totally short, 100% short, you're up 8.2%. And you are ahead of the S&P 500. So folks, if you can be in a portfolio of tech stocks that's up 8.2% and fully hedged, you're above the S&P 500. That is absolutely amazing. Let's go to the semiconductor. Semiconductor is still down a tad for the year. However, the top stocks that we have in our ETF, our semiconductor ETF, up 14.6%. And folks, if you're fully hedged, you are up 15.2%. You are fully hedged and tripling the S&P 500. Folks, that's how hedges work. That's how the best ETFs work. That's how the best stocks in the best ETFs work. Okay, let's go to the QQQs. QQQs are up 6.1% for the year, but the best stocks that we have in that QQQs, and it consists of 12 stocks, up double that. Up a little bit more than double that, as a matter of fact, up 13.8%. Now, if you're fully hedged, you're up 7.7%. Folks, you're still ahead of the S&P 500, and you're fully hedged. That is hard to beat. Very hard to beat. Now, let's go down here to the sector stars. And so the sector stars The ETF sector stars is our portfolio that we combine the XLK, XSD, and the QQQ top stocks in those portfolios are all combined in our ETF sector stars. So, long those stocks, you're up 14%. And we use the QQQs as our benchmark. So you're up more than double the QQQs. And folks, if you're fully hedged, you're up more than the S&P 500. You're up 7.9%. So out of these stocks, to be hedged and to have 18 stocks in your portfolio, so you have more stocks in there, and we like more stocks because the semiconductor and the XLK, the technology, have anywhere between 5 to 7 stocks. We like either the QQQs, which has 12 stocks in, or our ETF sector stars, which has 18 stocks in it. Fully hedged, it's doubling the QQQs, and fully hedged, you're still outperforming the S&P 500. Folks, that's the place to be, one of these here, and we like the QQQs, we like the ETF sector stars, because you have more stocks in there, so one stock doesn't hurt you, where it could in the semiconductor or technology ETF, because they only have 5 to 7 stocks in them. Now, let's go to other ETFs that a lot of you seem to like, and we don't care for them much anymore. And let's go to the transports. Transports are up 7.1% for the year, ahead of the S&P, but our top stocks are up 9.4%. But if you're totally hedged, you're up just 2.3%. Healthcare up 6.4%. This is one place where our top stocks are not outperforming the ETF itself. Over the long term, it does. If we go back last year, the year before that, back 5 years, back to 2015, we have always outperformed. But right here, right now, for the month and a half of this year, our top stocks are not outperforming. When we go to the home builders, well, our top stocks are outperforming the whole home builders by almost 2 to 1. And if you're long or totally short, and if you are totally long and short, totally hedged, you're almost outperforming the S&P 500. And same with the home construction. It's not doing much at all this year. So look at all of these returns on the ETFs that are good ETFs, but we don't have these ETFs. We might have 1 or 2 stocks from the home builders in our ETF sector stars portfolio, but we don't have much, because why not be in the best ETFs? And because that's where the best stocks reside, don't they? It only makes sense. So just take a look at these, and we're going to go back to the last slide. The best performing here is 9.4%, second is 8%. Let's go back to these. So now you're seeing almost double the returns from the best ETFs, or what we consider the best ETFs, because folks, as I mentioned in one of the daily newsletters, that if you go back 150 years, which we didn't have ETFs 150 years ago, we barely had a stock market 150 years ago. So if you can, in fact, really the stock market has been around a long time, but the Dow just started somewhere around 1896, somewhere in there, along with the Wall Street Journal, which was called, I think, the Dow Report at that time, or the Daily Report. It wasn't called the Wall Street Journal right in the beginning. So anyway, we are looking at, you want to pick the best stocks because technology is leading the way in every area, and it has been since they invented the machines, the steamboats, since they invented the telegraph, since they invented anything that had to do with technology, all the farm machinery. So this is where you want to be in one of these, and we suggest either the QQQs are 12 stocks in the QQQs or 18 stocks in the ETF sector stars. And again, you folks who are subscribed to the ETF letter, this will be in the subscribers locker under the ETF newsletters. So folks, we had a pretty volatile week. We were down grossly on Tuesday, and then we started working our way back, and everybody is awaiting the news on NVIDIA, and that's why the market seems to have been stalled out in here. But the S&P 500 is holding that 5,000 level. So folks, go out, enjoy the weekend, take your mind off the market, and we'll see you right back here next week.